What if I told you that you could work a full-time job and still qualify as a real estate professional, which would enable you to use rental losses to offset your W-2 income and save a ton of money on taxes? I'm a CPA and I work with a lot of real estate investors, and oftentimes real estate professional status is the number one thing that real estate investors want to talk about because rental losses by default are passive, and passive losses can only offset passive income. But W-2 income and business income is active income. It's not passive income. So rental losses can't offset the active income that we earn from our job or from our businesses, unless, of course, we qualify as a real estate professional. To qualify as a real estate professional, we have to spend 750 hours in real property trades or businesses, and we have to spend more time in real property trades or businesses than we do at our day job. So how then can you work a full-time job and still say that you spent more time in real estate than you did at your W-2 job? There's many tax court cases that say that that's not possible. The IRS doesn't buy it, and neither does the tax court. They don't believe that you can spend more time working in real estate, an additional 2,001 hours on top of your full-time job hours of 2,000 hours. They don't believe it's possible to work 4,000 plus hours during the year. But there's a tax court case that we're going to review in this video today where the taxpayer did just that. But there is a little caveat that I'm not going to reveal quite yet. So let's dive into the case and see what we have going on. So to give you a little bit of background on the case, this was decided back in 2011, and it's about a boat pilot who had a bunch of rental properties and used the rental losses to offset his W-2 income from the boat pilot activities. The IRS said you can't qualify as a real estate professional when you have a W-2 job. So they audited him, and he disagreed with their findings. So they all went to tax court to battle it out. Now, thanks to the fact that this went to tax court, we get a full opinion and we get to see all the details about Mr. Miller and the management of his rental properties. We also get to see why the IRS disagreed with why he qualifies as a real estate professional and why he thinks that he qualifies as a real estate professional. So let's dig into it a little bit. So this is the first page. You can see it's TC Memo 2011-2019. That's just a citation that you can use if you want to search it and learn a little bit more about it. And here's some background on Mr. Miller. So you can see here that he took a job with a tugboat company, and it allowed him to live in the San Francisco Bay Area. And he would actually go out to the vessels coming into the San Francisco Bay, and he would pilot them. Like they'd be like large container ships, passenger cruises, and large military ships. And he would pilot them from 13 miles at sea outside the San Francisco Bay Channel and then throughout San Francisco. So he was essentially bringing them into the San Francisco Bay, just the local pilot that navigates the local waters. So you can see here that his schedule as a pilot required him to work 7 days on, and then he'd had 7 days off. But here's the kicker. He generally is not required to actually work for all of his 7 days on. So his schedule is pretty flexible and predictable. And that's the big kicker with working a full-time job, but still qualifying as real estate pro. And that's essentially what this entire tax court case boils down to. The fact that Mr. Miller had a pretty flexible schedule and really wasn't working 2,000 hours a year, even though he was being paid as a full-time employee. Oftentimes we'll have conversations with physicians, for example, that will say, hey, I'm 7 days on and 7 days off. And does that enable me to qualify as a real estate professional because I'm spending half of my time off in working in real estate? And the answer to that question is really, how many hours are you working during your 7 days on? Because if you're still getting to a full 2,000 hours a year working at your W-2 job, or $2,000 hours or more a year working at your W-2 job, you still have to exceed the total working time in real estate. But the interesting thing here about the Miller case is that even though he was 7 days on and then 7 days off, during the 7 days on, he still wasn't working all of those 7 days. So he didn't really work a full-time job, even though he was paid as a full-time employee. The distinction that I'm trying to make here is that it doesn't matter if your job is considered full-time or part-time, or if you're paid as a full-time employee or a part-time employee, or if you're 7 days on and 7 days off, or 1 month on and 1 month off, that doesn't matter. All that matters for real estate professional status is, did you spend more hours working on your rentals than you did at your W-2 job? And if the answer is yes, then you can qualify as a real estate pro, assuming you also meet the 750-hour requirement. Hey, real quick, I'm new to growing a YouTube channel and could really use your help. If you don't mind taking a moment to like, comment, and share this video with another real estate investor that might find it helpful, I'll be eternally grateful. And don't forget to subscribe. Thanks so much. So back to the case, we start to see that he had a very big interest in building, and he acquired his general contractor's license as well. So you'll see here that he provides a lot of the services, not only to his clients, but also to himself. He owned 6 rentals during 2005 and during 2006, which were the years in question. And though he conceded that one of the properties he did not materially participate in, he did claim that the other properties he was materially participating. He was a real estate professional, and they should not be passive activity losses. And now we can look at exactly what was Mr. Miller doing with his rentals. So he was preparing the leases. He would collect the rents. He would spend a substantial amount of time researching and bidding on various rental properties. He would create timesheets and detail all of his time spent in the construction business too. So remember, he was doing a lot of the construction stuff too. He performed his maintenance work himself, which is, to be honest with you, pretty significant maintenance work. And he performed repairs as well, all by himself, including to the fence, the washing machine, garbage disposal, and back door. And here we go again. He's again doing a lot of the maintenance himself, managing the tenants himself, installing carpet himself. So Mr. Miller here is doing quite a lot by himself. He's not contracting this out. He's doing it himself. He's buying the materials. He's performing the labor all by himself. So it's becoming, in the court's eyes, pretty easy to see that Mr. Miller is significantly engaged in his rental real estate activities. But we still have the question of, did he spend more time in rental real estate than he did his boat piloting job? Because even though we've already kind of talked about it here, we haven't gotten to that point of the opinion yet. So the tax court still has to decide that fact. And here's where we start to see a little bit more about how Mr. Miller works. So he has witnesses that describe him as a workaholic who worked on the home after his piloting job and performed manual labor alongside him for each project on the property. You can also see other witnesses describe Mr. Miller's work ethic as extraordinary. A friend pilot and partner of him said he has a 1 in a million work ethic. So if you can have a friend come and testify to the fact that you have a 1 in a million work ethic, it might go in your favor if you ever face tax court. And here you go. His wife says that she had to go to the construction sites just to spend some time with her husband. Not 100% sure how that impacts a marriage, but from a tax perspective, definitely works in Mr. Miller's favor. So now we get to the opinion, and you can see that they have to figure out, did he spend more time on his construction and rental real estate activities than on piloting, and whether he and his wife materially participated in certain real estate activities to enable them to deduct the real estate losses for the year. Now, we've been talking about real estate professional status on this video. So 750 hours and more time in real estate than anywhere else. That enables you to qualify as a real estate pro, but you still have to materially participate in order to make the rental losses non-passive. Sometimes we run into the issue where we have a client that is a real estate pro. They're like a real estate agent or broker, or they're a flipper or developer. And through that activity, they meet the 750-hour test and the more time in real estate than anywhere else test, but they forget to materially participate in their rentals. So if you qualify as real estate pro on like a non-rental real estate business, you still have to go and materially participate in your rentals. Otherwise, they're still passive activities. So just don't forget that fact, because we see a lot of people forget that from time to time, and it can really blow up in your face in the event that you're audited by the IRS. Here's a quick call out to the losses that were at stake: $71,000 and $143,000 in the 2 years at issue. I didn't mention that before, but did want to call that out just so you can understand how much money was at stake. And here's where the decision starts. So they decided that they found that he did establish that he spent more than 750 hours performing significant construction work as a contractor on his own rental real estate activities. They also found that he spent more time on his construction work and his rental properties combined. So this is construction work and rental properties. Remember, he was doing construction for third parties plus his own rental properties. So spending more time on his construction work and his rental properties than he did piloting vessels. So there you go. So he met the 750-hour test and he met the spend more time in real estate than anywhere else test. So he is a real estate professional. But then we have to figure out, did he materially participate? So in order to assess material participation, this is something interesting to keep in mind. You have to materially participate in each rental property separately, right here, separately, unless you make an election to treat all interests in real estate as one single activity. And this is actually something that we see a lot of accountants miss. So what I mean by that is we've been helping inbound IRS audits. So real estate investors that are being audited by the IRS are calling us up and saying, hey, I'm a real estate professional, or I've got the short-term rental loophole, and I need some help because I'm being audited and I'm not 100% sure if my current accountant is capable of defending me. One of the first questions we ask is, did your accountant make a grouping election? For long-term rentals, the grouping election is under regs 1.469-9G. And for short-term rentals, the grouping election is under regs 1.469-4. If your accountant doesn't make that grouping election, then you have to meet the material participation test in each rental separately. And that means spending 100 hours and more than anyone else in each rental separately, or 500 hours and more than anyone else in, well, I guess just 500 hours in each rental separately. So it's really important to assess, should you be making that grouping election? Because once you make the grouping election, you can meet that 500-hour test across all of your rentals because they're treated as one for the purposes of material participation. If you don't make the grouping election, and if you don't materially participate in each rental separately, the IRS can say, gotcha, too bad, so sad, you lose, and there's really nothing that you can do about it. So really important to, again, pay attention to that grouping election on an ongoing basis. So here we can see the definitions of material participation. I'm not going to go through all that just in the interest of time, but they do call out the 100 hours and more than anyone else test. But there's also several other material participation tests. There's 7 in total. You just have to meet one of the 7 tests in order to materially participate in the activity. And here you can see the court saying we are satisfied that they materially participated in the Pepper Road property, but we are not satisfied that they've materially participated in the Morning Glory property, the Lind property, and some of their other properties. So this is a partial win for the taxpayer because they did prove that they were a real estate professional, even though they had a full-time job, but they failed to show that they materially participated in all of their rental activities. So if you're listening to this, the point that I want you to take away is you can qualify as a real estate professional, even with a full-time job. But what really matters is how many hours did you spend working in your job or your business, and how many hours did you spend working in real estate businesses and on your own real estate portfolio. And you can group the real estate business and the rentals together. You saw Mr. Miller, he had a construction business and he was managing his rentals. They looked at that time that he spent in the construction business and the real estate rentals as a whole. Okay, so you can look at all of the real estate activities and combine them for the purposes of qualifying as a real estate professional, meeting the 750-hour test and the more time than anywhere else test. But just again, really important to understand, it's not about how many days on, how many days off. What it's about is how many hours did you spend in your W-2 job or in your non-real estate business compared to how many hours did you spend in your real estate business. And you have to spend more hours in your real estate business than you do in your non-real estate business in order to qualify as a real estate pro. So I hope that this helps anybody that might be working a full-time job but not actually putting in full-time hours. And if you need any help, feel free to contact us. We've got links below in the description.